Hi everyone, JJ here with The Art of Value. Welcome. Well, is there an AI stock bubble? We know there's a stock boom, but is it a bubble? Today we look at a few investors, what they're saying about AI stocks and the AI boom, what they think of it, how it's going to play out. So let's get into it. Well, you might have seen my recent video about Stan Druckenmiller and how AI stocks are dominating his portfolio at the moment, even though he says that Nvidia is in nosebleed territory. Druck says what he sees in the market is there are a lot of people encouraged by certain areas of the market, including the AI stocks, the AI boom. So speaking about his own stock portfolio, and remember he hasn't had a down year, a negative year of returns in 40 years. He says they have some longs, but AI stocks are dominating the portfolio. They have done for the past 5 or 6 months, and he was speaking a few weeks ago. He was asked in this interview with Bloomberg whether he thought that AI stocks would make it through this hard landing recession, which he still sees coming, by the way, or whether it is getting into bubble territory where he sees any danger of an AI stock bubble. Well, he kind of chuckled and said all of AI is not going to make it through, whether we have a recession or not, because they haven't separated the wheat from the chaff yet, meaning that there are a lot of AI stocks emerging, or so-called AI stocks, and in these innovative times, when there's innovation, a surge of innovation, a lot of companies don't make it through. We could say just like back in the dot-com bubble if we get into a bubble situation. But he also said that he thinks AI is real, unlike crypto, which he wasn't so keen on. He thinks AI is real and it's going to be a big thing. What he said was he thinks that AI is going to be as transformative as the internet has been. He thinks he's argued before publicly that if staples can go up during recession, why can't a company like Nvidia? He said if earnings and orders go up 70% with Nvidia during a hard landing recession, it's not clear to him why the share price would go down, even though it is at a very lofty valuation at the moment. He said if a company has very good earnings during a hard landing recession, the share price may not go down at all if those earnings are sustainable. If they're not sustainable, the market works that out and sends the share price down. He was asked if there are lessons to be learned from the dot-com bubble in relation to the AI boom or bubble that's happening at the moment, the high valuation levels, because he went through the dot-com bubble and he had his problems back then. He said, yes, there are lessons to be learned from the dot-com bubble. Don't get emotional and don't get crazy. And we've seen FOMO play out in the last couple of years with what happened with emerging tech bubble. Is it happening again with AI? Is this an AI bubble? I can see a lot of FOMO around ramping up, that's for sure. He had a story from the dot-com bubble days. He said when he was at Saurus, he shorted $200 million worth of internet stocks, and he had to cover them in 3 weeks, and it cost $600 million. He lost $600 million in just 3 weeks. So that was a harsh lesson to be learned. He said it was 12 stocks, but he also said that later all of the companies went bankrupt. They all went bankrupt. So a short was generally right, just wrong timing, very hard to short. He said that he will say this about the AI boom, that Nvidia, he noticed that Nvidia was in the low 100s back in October, and now it's at 380, 390. When he spoke, it got over 400. It's 406 as I speak. It got to 420, so it's gone down a little bit. But he said the valuation is in nosebleed territory. Those are the words he used. It's in nosebleed territory, implying that he thinks it's a bubble. But he also said if it's a secular move, if AI is real and it's this big secular thing, he said there's no reason why it won't go on for 2 to 3 years, not just 10 months. He said that's not the way it works. It can go on just like the dot-com bubble for years, 2 to 3 years more. He thinks Nvidia could go on and AI stocks as this plays out, which is a big call, and he may be wrong there as timing is difficult in a bubble. We'll just have to see what happens, but this is what he said. He gave the example that during the dot-com bubble, many of the stocks went on in a bubble for 2.5 years, and some of the guts of the internet, he said, like the Ciscos and the Sun Microsystems, the bubble went on for 4 years before it collapsed. So he's not denying that it's the bubble, but he's kind of riding it. He's implying that he's riding it. He does own Nvidia stock, and he said that he's planning to hold it for 2 or 3 years. And he's just talked about Nvidia, that he owns that, but he did say AI stocks are dominating his portfolio, so that implies he owns other stocks. He didn't mention what they were. He wouldn't expect him to talk about names, but he did talk about Nvidia because it's the one, the popular one, the one everybody's talking about, and at nosebleed territory valuation. That's not to say that it could go down in the short term. He said that could happen. There could be a big dip from where it is because it's at such a lofty valuation, but he thinks it could go on after that. So It may not just crash down from where it is. It could sort of go down and then go up again. I mean, of course, these things are unpredictable, but he basically says that this AI thing could go on in terms of the exuberance and the optimism. It could go on for quite some time yet. By the way, if you're watching on YouTube and getting value out of this episode so far, I'd appreciate it if you hit that like button to help spread it to more people, help with visibility. And also, we're well over 1,000 subscribers on YouTube and Spotify now across those two video platforms for podcasting. So if you're not subscribed yet, consider subscribing to get more content like this if you're enjoying it. Next, we have some comments from legendary investor Joel Greenblatt about the market. What's he got to say about the situation? The interview was from an HFA fireside chat, which was not beside a fire, of course. He talked about the market, the current situation, and how he sees what's going to play out in the future. Greenblatt said that he thinks we don't have the dichotomy that we had back during the internet bubble, but we do have some opportunities that rhyme. He said this period rhymes a little bit with the opportunity set that happened to him back in 2000. He does give a bit of a backstory to explain what's happening in the market now. He said in 1985 they had a really good 10-year run, enough to be able to return capital. They had an incredible run actually, and he returned capital so they didn't run outside capital. Said he did keep running money, kept his team on, just not with outside capital. And he said in 1998 they had a 5% loss when the market was up 28%, which was the first time they actually had a loss. And he said it's really hard to be down 5% when the market's up 28%, but that's the way it was. And the next year was the same. They were down 5% and the market was up hugely. So this 2-year bad run after having a very good run. It was the internet bubble and they weren't invested in those kind of stocks. A different area of the market which was doing badly at the time. So they were just sort of waiting till the market turned, and it went on for longer than they thought. So they had these really bad years. And he said if you know compounding and you get negative returns but the market's up double digits or more over 2 years, that's really bad. But he said in that third year, in the next year when the market went down, they were up well over 100%. So they made it up. They had this great year. He said it's not that they were geniuses the next year or they were idiots the year before. It's just that the market waited to pay them. But they eventually did get paid for their good research, their good analysis. They just had to wait through that bubble period to get paid, and boy did they get paid well. So the market went down 10% in that year, but they were up 115%. And that's when he said the dichotomy that he saw back then, he sees it rhymes with what's happening right now, which I found fascinating. He thinks it's a similar situation, so people in those kinds of stocks that he was back then will get paid really well. He says on his website, Gotham.com, there's research that tracks the 20% of the cheapest companies out of the 1,400 largest companies. They do this on an ongoing basis, the prices from day to day. He says at the time he was speaking, the companies are at the 93rd percentile of the cheapest they've been over the last 30 years because their research goes back 30 years. So he says these companies are very cheap right now, which is how he sees it was like during the dot-com bubble as well. That's why he's saying it's rhyming. But 20% cheapest companies are very cheap historically compared to the other companies in the index. He says it's only 7% of the time that these companies have been that cheap overall. He says it's not a prediction. He's just observing the data. He says, I'm giving the data to you. This is what it says, that it's been this cheap only a very small percentage of the time. So he points out that when the rubber band stretches that far away from value, it usually snaps back. Will it? It's not a prediction, but that's what he's saying. He's just putting it out there. That's why he says the opportunity set rhymes with what happened in 2000 to them, because he's seen it before. That's what happened then. They had to wait to get paid, and he sees that happening again. That could happen again, very likely. Not a prediction, but he doesn't know when. He can't say when. That's impossible to predict when. It could go on for a lot longer, and as we saw, Druckenmiller said it could go on for 2 to 3 years more, and the internet bubble went on for a lot longer than people thought, to the point where people thought it was different this time because it was a new economy, this internet economy, it was all different. So could AI be like that? It's going to change the world quickly, and these stocks should be this high, and it's going to be like that forever. Which brings us to our next investor, Jim Bianco, a macro markets researcher and investor. He says that AI stocks are definitely in a bubble right now. This is from an interview on Wealthion on YouTube, an hour-long interview where he talks about different things, including the AI bubble that he sees and how he sees it playing out, which he thinks is similar to the dot-com bubble and other periods in history where things have become way overhyped. He said that anything to do with AI right now is way out there in bubble land, including Nvidia, and he said some of the FANGs. So no doubt he's talking about Google and Microsoft there, who are heavily involved in AI. Microsoft is involved with AI as a big investor in OpenAI, and Google has been talking about their AI capabilities, brought out Bard, so there's a lot of hype around what they're doing and adding a lot of value to their stocks because of it. He also adds that there are only about 8 stocks that are propping up the market. The rest of the market isn't in bubble territory, nothing like it. We've still got a hostile Fed putting up rates and trying to get that inflation down, sticky inflation that's elevated. So he says there's a lot of restructuring still to do, so it's still not looking great economically. He also says that the market's in 2 camps. We have this really elevated AI boom, and the rest of the market's not like that. Like Stan Druckenmiller and Joel Greenblatt, he goes back to the internet bubble to try and explain what's going on right now. He uses the often cited example of Amazon. Back in December 1999, Jeff Bezos was on the cover of Time magazine, and the internet was going to change everything. It was going to be this revolution in online retailing, and that's true. Nearly 25 years later, that is true. It did happen. But if you'd bought Amazon in December 1999, you would have paid over $100 for it. And then the stock crashed down to $6 a year or two later, and it took a long time to get back there. So these revolutions in technology can happen. He says AI revolution will happen. He thinks it will happen. And Stan Druckenmiller says this too. Sometimes the technology can be great and it can work out well over time, but it still can be a bad investment when people get FOMO, gets really excited into a bubble, and you buy into that bubble. It can be a long time before you get paid back if you invested at that wrong time at the peak of the bubble or during it. It's this hype cycle of overinflated expectations and then the down, and it can be a long time before it gets back to where it was, even though the technology is doing well over that time. The market valuation can be separate from the technological innovation. So he said he could see the situation where people buy Nvidia and a lot of AI stocks and still be at a loss in 10 years time, just like happened back during the internet boom. Some of those stocks won big if you think of Amazon and Microsoft, but they were very expensive back in the dot-com bubble, and it took a long time to get paid back if you bought near the peak of that bubble. He said at the same time this is happening, the rest of the market is meandering along, and it could continue to do so. So there's this excitement in the AI boom that the rest of the market's being held hostage to inflation and just kind of going sideways. He said the problem with the bubble stocks, the AI stocks, is that he thinks that they'll fall, but they could go up way more before they fall. It's unpredictable, just like the internet bubble. It went on for longer than people thought, as Stanley Druckenmiller pointed out. So it's just unpredictable how high they will go. When there's a bubble, it can go a lot higher. So, and it hasn't really been going for a long time. If you think about it, it's been pretty quick. It's only been months really since the end of last year. So it could go on, as Druck said, for another 2 to 3 years. We just don't know. He's seen it before. I remember back during that time, it did go on for a lot longer than people thought. So it could just be getting started. We just don't know. Or it could fall today or tomorrow. It could go for a dip. We just have no idea with bubble stocks what will happen. So in summing up, I think all of these investors have got something good to say here. I think Stan Druckenmiller riding the bubble, recognizing that they're at nosebleed levels, but it could go on for some time, is probably correct, but we just don't know. It could go down next week and that could be it. But it could be a secular run over the long term for AI boom like it has been for the internet. It did work out over the long term. I do definitely think there are hype cycles to innovation and to tech that go up and down, and people get overexcited and buy into it. And so something that can work out really well can still be a bad investment. And Joel Greenblatt, who's done very well over a long time, he can see the market being elevated. And I do think that value investors will probably get paid back in the way that he says, buying the low 20% of the market, the right stocks, not just anything. So I think that there is a bubble forming in AI stocks for sure. If you look at Nvidia, it is at, as Druck said, nosebleed level, but that doesn't mean it can't go up more. But I think it's a risky situation. I'm not buying Nvidia. I am looking at some of the picks and shovel companies in the AI sector because I do think, like Druck, that this is a secular move. I think that AI is going to work out very strongly over the long term and maybe even over the medium term, because it's kind of as fast as anything has gone before. Very fast development now. It's been going on in the background for a very long time. Will it slow down for a while? We just don't know how it will develop. But people, the market is certainly getting very excited about Nvidia in particular, and that's flowing on to a lot of other stocks, and some will be really bad stocks. Like Druck said, separating the wheat from the chaff, I think that will happen. That's how capitalism works, and these hype cycles work like that, where everything goes up. The rising tide lifts all boats, and then people look at, are these companies actually any good? It's a weighing machine in the long term and a voting machine in the short term, and we're definitely going through that voting stage without seeing how it actually will work out. But it's going to be very interesting to see. I'd like to know your comments. What are your thoughts? Do you think there's an AI bubble forming? Do you think it's already at the peak, soon to be the peak? How long do you think it will last? Do you think there's no bubble at all? Let me know in the comments. As I said earlier, if you're watching on YouTube, I'm going to put an episode here to that recent Stanley Druckenmiller episode where he had more to say about the AI bubble, the AI stocks, how he's investing in them, and what he thinks is going to happen. So go and have a look at that. I'm going to put it in the description for those watching and listening elsewhere. And thanks for watching or listening, and I'll see you next time.